Welcome back, Crypto Explorers. We're diving deep today, and trust me, you're going to want your scuba gear for this one.
Definitely going to need more than a snorkel for this, that's for sure.
We're tackling a metric that's, well, it can be a bit of a brain twister at first, but once you wrap your head around it, it's like having a cheat sheet for the crypto market.
Ooh, cheat sheet. I like the sound of that.
Fully diluted market cap, or FDV for short. It's all about understanding a project's true potential. Not just what it looks like right now,
Yeah.
but way down the line.
Yeah, it's about looking beyond the hype, peeking into the future of a project.
Exactly. And let me tell you, this isn't just some theoretical number crunching. Understanding FDV can actually help you spot those coins that might be, shall we say, a little overvalued at the moment.
No, yeah, it can definitely save you from some potential heartache, especially for those folks looking to invest for the long haul.
So let's start with the basics. What exactly is fully diluted market cap, and why should our listeners care?
Okay, so imagine you've got a company, right? And this company, they have 100 shares, but only 50 of them are actually being traded publicly.
Okay, I'm following so far.
Now, the market cap, that's just looking at the value of those 50 shares that are out in the wild. But FDV, that takes all 100 shares into account, even the ones that aren't available to buy or sell yet.
So it's like a sneak peek at what the company could be worth if all those shares were suddenly up for grabs.
You got it. And in the crypto world, it's the same idea. You take the current price of a token and multiply it by the total supply. That includes all those tokens that haven't been released yet. Maybe they're locked up or still being minted.
So we're talking about the total potential supply, not just what's currently circulating.
Precisely. It's a much broader view of a project's potential value.
Okay, I'm starting to see why this is important. But let's bring it home for our listeners. How does understanding FDV actually help someone who's, looking to navigate the crypto market and maybe make some smart investments?
Well, think of it like this. You're comparing two different crypto projects. Let's call them Project A and Project B.
Okay, Project A and Project B. Got it.
Now, Project A, it has a market cap of, say, $10 million.
10 million. Pretty impressive.
Project B, it's sitting at a market cap of $5 million. So at first glance, you might think, oh, Project B is a steal. It's half the price.
Right. Seems like a bargain.
But hold on a second. Let's look at their FDV.
Ah, okay. The plot thickens.
What if Project A's FDV is 20 million, which isn't too far off from its current market cap?
Makes sense.
But Project B, its FDV is 100 million, way higher than its current market cap.
Whoa, that's a big difference.
Exactly. And this is where FDV becomes your superpower. It's showing you that Project B, even though it looks cheap right now, it could actually be much more expensive down the line.
Because once all those extra tokens hit the market,
Boom. Supply goes up, price could go down. Suddenly, Project A doesn't seem so pricey anymore, does it?
FDV is like a crystal ball. It's letting you see into the future of a project's value.
That's a great way to put it. It's all about anticipating those long-term effects of token releases.
This is fascinating stuff. Now, earlier you mentioned that FDV can help investors spot potential overvaluation, and I think our listeners would really benefit from a deeper dive on that.
Absolutely. So a high FDV compared to the current market cap, especially for a project that's still in its early stages,
Yeah.
it could be a red flag. It might mean that the current price is being pumped up by hype and speculation rather than actual value.
So FDV helps you see past the hype and look at the bigger picture.
Exactly. It's about understanding the true potential of a project, but also the potential risks, like dilution.
Dilution meaning?
The value of your tokens decreasing as more tokens enter the market. FDV helps you assess that risk.
This is gold, pure gold. Okay, I know we've been singing the praises of FDV, but like with any tool, I'm guessing there are some limitations we should talk about.
You're right. It's not a magic bullet. FDV, it doesn't take into account the actual market forces, things like how many people are actually buying and selling the token, the overall sentiment in the market, or even what the team behind the project is doing.
Right. Those factors can play a huge role.
Exactly. It's not just about how many tokens are out there. It's about how they're actually being traded and used.
So FDV is a piece of the puzzle, but it's not the whole picture.
A big piece, but yeah, you got to look at the whole picture. And another thing to keep in mind, FDV assumes that all tokens will eventually be in circulation, but that's not always the case.
Ah, that's right. What about those locked tokens we talked about earlier?
Exactly. Many projects, they have tokens that are locked up for a certain period of time. Maybe they're held by the team, early investors, or even reserved for future development. These tokens, they're not actually affecting the market price yet.
So the FDV might be really high, but if a large chunk of those tokens are locked up, the circulating supply stays low.
Hmm.
And that can actually drive the price up, right?
Right. So you could have a situation where the FDV is high, the price is high, but it's all because a big portion of the supply is out of the game for now.
Makes sense. And you also mentioned high inflation rates as a factor that can make FDV a bit less reliable. Can you elaborate on that?
Sure. Think about a project where new tokens are constantly being created and released, like a faucet that never turns off.
I'm picturing it.
That's high inflation, and it can dilute the value of existing tokens, even if the FDV initially seems reasonable.
The more tokens flood the market.
The less each individual token is worth.
Makes sense.
Some DeFi projects, they have high initial FDV ratios because of how their tokens are distributed. So it's super important to look into their vesting schedules, to understand when those tokens will actually be released. That can have a huge impact on the price down the line.
It's like you're trying to figure out how much water is going to flow into a pool. The FDV gives you an idea of the total capacity, but the vesting schedule tells you how fast that water is coming in.
Perfect analogy.
So while FDV is a fantastic starting point, it's crucial to consider it alongside these other factors, like the project's token distribution model, how those tokens are released over time, and of course the overall health and potential of the project itself.
Couldn't agree more. It's all about getting the full picture.
Okay, I have one final question before we wrap up. Are there any specific scenarios where relying on FDV can be particularly tricky or maybe even misleading?
Ooh, good question. Yeah, I'd say early stage projects are a big one.
Because they often have a high percentage of unreleased tokens.
Exactly. The FDV might look incredibly promising, but remember, most of those tokens are probably locked up. So the circulating supply is low, which can artificially inflate the price.
It's like a mirage in the desert.
Huh. Another way to put it, you see this oasis of value, but once those locked tokens start flowing, the landscape could change dramatically.
So what's the takeaway here for our listeners?
Look, FDV is a powerful tool. It can give you valuable insights into a project's long-term potential, but it's just one piece of the puzzle. Always dig deeper. Look at the tokenomics, the vesting schedules, the team behind the project. Do your own research. And most importantly,
Don't just blindly follow the numbers.
exactly, use your head, be critical, and make informed decisions. The crypto world is exciting, but it's also a bit of a wild west out there.
Truer words have never been spoken. And on that note, I think it's time for us to wrap up this deep dive.
Time to come up for air.
Thanks for joining us, everyone. Remember, we're providing information here, not financial advice. Always do your own research before making any investment decisions.
Stay curious, stay informed, and keep exploring the crypto world.
And we'll be back soon with another deep dive. Until then, happy investing.